So good afternoon, participants. Hope I'm audible to you. So one thing I want to tell you guys, we are just open for first 100 participants, and after 100 participants, we will lock the meeting. And after locking the meeting, if somebody wants to join, they will go to the Google live YouTube link. We will share the live YouTube link where you can join the our FDP. So once we'll reach to the 100, we'll lock the meeting, and after that, nobody will be able to join the Zoom direct interact FDP. And even if you somehow disconnect or get out of the meeting, you should just go through the live YouTube link. You will get the access for the FDP. So after 5 minutes, we will supposed to start our today's session, and the panelists and speakers are in the waiting room, and they will start addressing their this topic. So again, we welcome you on our today's application. Within 5 minutes, we are supposed to start our today's. Thank you.
Okay. Good afternoon, everyone. I said myself, Sakshi Narayan, IIMT College of Management Assistant Professor over here. I welcome you all in the 5-day FDP online session, which is on the theme I am Entrepreneurial Fund Management, the sub-theme Time Series Analysis and Time Value of Money. So, taking over today's second session, which is on the fundamentals of the time series analysis for entrepreneurs, I, Sakshi Narayan, along with my colleague, Mr. Abhijit Ghosh, is going to take over the session. Before starting, let me introduce myself. I am as assistant professor over IIMT College of Management and also pursuing my research from the MIT University, Noida. Apart from this, I have 11 years of experience in the corporate as well as education industry. I am a certified mutual fund trainer too. So now if we talk about the time series analysis, the data drives decisions in the world of business. Understanding the patterns over the time can be the key of staying ahead. Whether it is predicting sales trends, managing inventory, or optimizing financial planning, time series analysis empowers the entrepreneurs to drive the data insight, which helps them to know that what the trends are going to set up, how the changes are going to take place in market, what minute things they should be focused on, and then they should drive in the market or step in the market. In this session, we will break down the fundamentals of the time series analysis, making it practical, accessible, and relevant for the business growth. So let's explore how past trends can show smarter decisions for the future. So if we are talking about the fundamentals of time series analysis, firstly, let's go through the overview of time series analysis. What is time series? It is a situation or the analysis, a specific way of analyzing the sequence of data points collected over an interval of time. In time series analysis, analysts record the data points to consistent interval over a set period of time, rather than just recording the data intermittently or randomly. However, this type of analysis is not merely an act of collecting data over a time. This, what we can say that the what sets time series analysis or the data collected under time series apart from other, this shows how the changes of variable or how the changes in variable taking place, or in other words we can say is a crucial variable because it shows how the data adjusts over the course of time, and it provides the additional source of information and a set of order of dependency between the data. Time series analysis also, we can say, it requires a large number of data points to ensure consistency and reliability. An extensive data set ensures we have to representative sample size, and that analysis can cut through noisy data. It also ensures that any trend patterns discovered are not outliers and cannot be seasonal variants. So whatever the data we are recording, it keeps a record of the historical past records also, which help us to predict the future. Now moving ahead, let's talk about the importance of time series analysis. That why this time series analysis is most important, or why we require in our businesses for the entrepreneurs in the current market scenario. The thing is that firstly, it predicts the future trends. Like time series analysis enables the prediction of the future trends, allowing businesses to anticipate market demand, stock prices, and other key variables, facilitating proactive decision making. It also detects the patterns of the data, that what is the pattern is drawn from the data which is being fetched out. It helps to detect recurring patterns and providing insight into underlying behaviors and the potential of outliners. It also helps us to risk mitigation. That means it helps us to spot the risk. What are the risks which we can face or the business person can face? How to solve out those risks? How to overcome that risk? And then accordingly, we can make a strategy. A strategic planning can be done by guiding the decision making across finance, related to healthcare, related to other sectors, and furthermore. Not even in this, it also helps in competitive edge. Like the time series analysis enables business to optimize resources allocation effectively, whether it is inventory, workforce, or financial asset. By staying ahead of market trends, responding to changes, and making data driven decisions, business gain can be checked out or can be met. Even we need to know how these time series analysis are going to help us out based on the series or based on the change in the situation of the time. So for that, let's know what are the components of the time series analysis. Now, if we talk about the components, you can clearly see on the screen that the components of time series has been divided in four parts, that is trend, seasonality, cyclicity, and irregular. Just taking an example of the apparels, what we used to do. Generally, we follow the apparels, or we wear the apparels based on the trends. What trends are going on? What is the most trendy dress or most trendy attire is being used in the market? Same way, time series analysis also use trends. That means it represents a long-term movement or directionality of the data over time. It captures overall tendency of the series to increase or decrease or remain stable. Even trend also indicate us the consistent increase or decrease, showing the complex pattern. Now, if I just took the example of apparel, so just going back to the 90s, when the ladies used to wear that bell-bottom jeans or high heels, now the trend has changed. They are wearing the pencil jeans or shorts and tie. Look, now no one eager or no one want to wear the bell bottoms again and make them in a trend. So it's like whatever the trend is going on, we are going to follow. We cannot be apart from the trend which is there in the current scenario. Second one is seasonality. If I refer to what is seasonality, it is like a periodic fluctuation of patterns that occurs at regular intervals within the time series. These cycles often repeat annually, quarterly, monthly, or weekly by factors as a season, holidays, or business classes. So, like if you are in a, you're talking about the seasonality. When you are taking example of the seasons which we are having in India, if a rainy season, we are going for the rainy seasons apparels which are being used over there. If it is a winter season, we use the apparels based on the winter wears, and the summer has a summer season apparels with them. So these changes takes place either based on the holidays, or annually or monthly, or based on the business cycle, that if I'm going to a business meeting or some important work, I will be wearing my business attires. If we are going some party, we are wearing the some party dress or the dress which is suited over there. So these are the seasonality time series analysis component. Now, if I talk about the cyclicity, cyclical variation are no longer, or we can say a longer fluctuation in the time series that we have in a fixed like seasonal. In seasonal, we have a fixed duration that either 3 months or 6 months. We are going to follow the trend, or we are going to follow the data, and then next, after 3 months, it is going to change. In cyclicity, the cycle used to vary for a longer run. This fluctuation represents economic or business cycles which can extend over multiple years and are often associated with expansions and contractions in economic activity. Even if we are talking about the irregular, or we can say the noise component, it also means as a randomness, which refers to the unpredictable or random fluctuation in the data. The data that cannot be attributed to the trend, seasonality, or cyclical variation. These fluctuations may result from the random events, like whatever the situation is going on. I'm just taking a random data from some event, and I'm just making the analysis that okay, the changes has been taking place because of this. The scenario might change because of some other reason. I'm not going to follow the historical records or the current records which is going on. Even if these fluctuations may result from the random events, measurement errors, the chances of errors increases. And in this noise or irregular component, it is a challenge for the entrepreneurs or for the business person to be taken care of or to be focused on. So as the component of the time series analysis indicates, it makes sure that either going for before going for the irregular data or taking the random data and making yourself challenges, just follow the trend, seasonality, or the cyclical based on the business in which we are dealing in. Now, further, if I'm talking about the models and its application, not going in deep that what are the models all about and how they're applicable. I'm just giving you the overview so that we can focus more on the part that how it is going to be helpful for the entrepreneurs. So just giving you a brief overview. The first model is autoregressive integrated moving average. Its main principle is to combine the autoregressive and moving average models with differencing to make the time series stationary. It is characterized by three parameters: autoregressive order, degree of differencing, and moving average order. Now, if we think about the applications where they are applicable, it is applicable in the univariate time series with trend without seasonal components. That means if we are following the trend analysis component, we can use the model ARIMA. The second one is S-ARIMA, or we can say seasonal ARIMA. It extends the principle by adding seasonal term to handle seasonality in the data. It includes additional seasonal patterns like seasonal autoregressive order, seasonal differencing degrees, seasonal moving average order, and seasonal period. It is applicable with both trend and seasonality too. The third model is Hall-Winters, that is exponential smoothing. The main principle of this is that it applies exponential smoothing to capture level, trend, and seasonal component in the data. A common seasonal time series analysis is applicable in real data. That means if we are talking about where it can be applicable, it is applicable in the time series with the trend, seasonal, specifically or focusing on the real-time data record. Now the next is a where, that is vector autoregression. The principle of where is that it is multivariate extension of autoregression model capturing the linear interdependence among the multiple time series. Each variable is modeled as a linear combination of its own past values and past values of other variables also. The application is that it can be used in the multivariate time series analysis, such as analyzing the relationship between the economic and the indicators. Now, the lastly is, sorry, yeah. Now, the lastly is generalized autoregressive conditional heteroscedasticity, which means it's the main principle of this model is a conditional variance of the time series as a function of its own past values and past variance. The main application area of this model is the financial time series with the volatility cluster. This methodology used in the time series analysis can be applied simultaneously as a part of comprehensive time series strategies to provide several outcomes that verify each other correctness and provide a broader picture. Now moving ahead. Now if we are talking the main concept of why business should consider the implementation of time series analysis, or in other word we can say what should be the outcome of implementing time series analysis, time series forecasting or the analysis, then I would like to focus on few points which every entrepreneur or the business person should get taken care of. Firstly, improve forecasting accuracy. Whatever the performing the time series analysis and forecasting enables more accurate prediction of the future trends, enhancing decision making. Even they should focus on the risk management, that it helps and mitigate the risk by predicting market fluctuations in the sector like finance. Also, they should optimize inventory management, that is, retailers can anticipate demand, reducing stockouts and excess inventory and saving cost. Efficient resources should be allocated, like energy companies can forecast consumption patterns, ensuring a balance between the supply and demand. The data which is being used or which is being recorded, it should be so accurate so that it can help in the decision making. And after overall, it should be also focused whatever the historical data is being recorded and historical data is being taken care of in the further future to do the forecasting. It should be managed very in a very proper way, in a very accurate way. Basically, in this form of analysis can be advantageous in numerous ways of offering competitive advantage to IT consulting firms, digital and offline companies. It serves as a solution to the real world problem that involves time series analysis, helping business predict future. Now, moving further ahead, I would like to hand over the session to our colleague, Mr. Abhijit Ghosh. So he is going to take the charge. Sir, over to you.
Thank you very much, ma'am. I welcome everyone again. Good afternoon, everyone. It's an absolute pleasure to become a speaker along with the anchor. So I look forward to a session where I can be useful to you in terms of knowledge and sharing ideas and my thoughts on time series analysis and entrepreneurship. So we all know that what is entrepreneurship? I mean, it is, as you can see, it is at the core, is the dynamic process of creating incremental wealth, innovating across various sectors. And this process definitely involves a blend of risk taking, long-term vision, and application of skill. Now, how time series is useful for such entrepreneurs? If you see, for entrepreneurs, time series analysis is crucial for understanding the demand, managing inventory, optimizing pricing, and making data-driven decisions. It helps in recognizing market trends and customer preferences and your particular financial risk. Now, understanding time series in all these theoretical terms sometimes becomes very bookish and very specific. And people who are from different and various fields of studies, we must understand the time series. We as an Indian, we have a genetic amalgamation with this time series. Because if we thank our Indian knowledge system, time series is a statistical concept. It deals with a lot of data points recorded over the successful or successive time intervals in understanding trend, pattern, and cyclic behavior over the period of time. Now, if you see how it is important, Indian scriptures like Arthashastra, Rig Veda, and Manusmriti, and so on and so forth, so many texts, they recognize the importance of time-based decision making. The daily panchang, the Indian calendar system that we know, we have to see when the panchang is right to do some auspicious things, to celebrate certain festivals, to buy a new house, new car, and so on and so forth. Now, the most interesting part of our Indian knowledge system, which follows time series to the core or to the T, is the Jyotish Shastra, where planetary movements are tracked, and over the period of time, it predicts the future event uh, on the basis of how time series functions. Even the ongoing Kumbh Mela, we say that it is reoccurring after 144 years. How do we decide that it is reoccurring after 144 years? It is completely based on the time series data evaluated, collected, and looked upon over the centuries and centuries and centuries. So, coming out of this Indian knowledge system, not fully, but I would like to share another concept which is very interesting and connected with geopolitical. And you see how I'm trying to discuss my thoughts or share my thoughts with you over different fields of study and different thought processes where time series is used. So we all know Arthashastra, it's very popular. And now there is a concept called Vijigishu in that. Vijigishu. So Vijigishu is Kautilya's concept where it is linked to time series analysis. Vijigishu refers to a king or a ruler who aspires to conquer or to expand or to maintain a strategic dominance or to keep its border safe. So it is a continuous assessment of political, economic, and military trends over the time. Now, how this is important? If you take an example of India, how India is putting up a sphere of influence where you can see that India has a very strong adversary. We fought many wars with Pakistan. So if we see that the concept of Vijigishu can be applied here, so India is putting up an sphere of influence with humanitarian works with Afghanistan. So crossing Pakistan, there is a sphere of influence which is being created in Afghanistan. Again, if there is a problem in Afghanistan because of the rogue tribes, you have a sphere of influence built up in Iran, where you have Chabahar port and which is contemporary to Gwadar port of Pakistan. And so we are making strategic moves. And even if Iran is having a problem, then we have a strategic alliance or strategic sphere of influence with Israel and certain countries of Middle East. So from this small and very simplistic way of looking at the geopolitical strategies, the trend and time series analysis giving us a point of view how Vijigishu will be applicable in this concept. Studying the trade patterns, taxations, revenues, inflations over time, political stabilities, internal governance patterns, and external alliances, military strength, which you can see by tracking enemy movement, past conflict, seasonal advantages, social sentiments, understanding the shifts in public opinion over time, that why India is going and the other country is falling apart. So these are all, if we can see through particular time series analysis and the data that are being collected over the period of time and how we do analysis and come out with the particular result. So why I'm taking up this example has a very simple connection. That is, what is a common factor between an aspiring king and an entrepreneur? Vision and ambition, they both have. As an entrepreneur, you want to build and expand your business empire. An aspiring king aspires to expand its kingdom and the influence. Risk taking, both are trying to invest resources in uncertain ventures, engaging in military conquest in one hand and investing in business ventures in another hand. So this is a very simple and common aspect that I thought that I must discuss with you, so that we can look at different eras or different things or different part of our life or different knowledge systems to understand the time series is applicable in a whole lot of places, apart from looking into from a core subjective point of view. So again, coming back to the more business-oriented contemporary world, time series analysis and entrepreneurship, that how it works. So let's see that how in this context we are trying to look in this particular area. So we understand that in entrepreneurship, effectively managing various business aspects is very crucial. So let's see how. So first point that I would like to discuss is demand forecasting. That is predicting future sales and along with it, the managing of inventory. So demand forecasting involves predicting future consumer demand for products or services to optimize inventory levels, production planning, resource allocation. Accurate forecasts help business to minimize the cost associated with overstocking or stock out, because things might get damaged or get expired. So ensuring products are available when consumers need them is very, very important. So let's see with an example that Coca-Cola uses a moving average model, which ma'am has explained earlier, to predict beverage demand and ensure optimal stock levels. So if we see from just a very simple example, the moving average method is actually something that smoothens the fluctuations in sales data by averaging the particular details, useful when past values, averaging the past value, and it is useful when sales data has random variation, but no clear trend or seasonality. So here I have taken a small example of a retail store records monthly sales. Suppose 120 on month 1, 150, 130, 160, and so on and so forth. So if you put it in a moving average model, a 3-month moving average model, so it can be calculated as 133.33, something around 133, or you can take a complete new bottle of Coca-Cola as 134. So that can be an optimum stock level that the shopkeeper or the retail store would like to maintain so as to cater it customers' demand. So we see that how moving average method or overall time series is useful and is used by so many companies to predict the smallest part of their operations. In a similar way, if you see that financial planning, budgeting, and your forecasting revenue is very important for a particular business. Suppose a startup earns revenue through software subscription. The company wants to forecast its revenue for the next 6 months to plan its budget effectively. So we see, for example, hypothetical data that on the month of January 5 lakh, February 5 lakh 20,000, March 5 lakh 50,000, and April 6 lakh, then May 6 lakh 50,000, and June 7 lakh. So in this case, based on these projections, the company develops a budget that allocates funds to various departments to support their strategic objectives and operational needs. So in this case, if we see that first part, that is forecast using moving average model again, the forecasting for the 7th month, that is if you see the till June we have a data, and to forecast it for the 7th month, we have taken up the last 3 months of June, May, and April. So it becomes the moving average is somewhere around 6,50,000. Now, if we calculate the budgeting based on the forecasted revenue, assuming that operational costs are 50% of the revenue, so projected profit equals to forecasted revenue minus estimated expenses. So for July, 6,50,000 revenue forecast, profits 6,50,000 minus that 50% of the operational cost into the revenue forecast. So it will become like 3,25,000. So this is the kind of amount that will help the startup to decide how much to invest in the coming months in marketing or R&D, whether it can hire few more employees or not, whether they need to go for some external funding. So in a way, time series helps people to understand the revenue that are being there to or the demand forecasting is there. So in a similar way, that we all know that how market optimization and with the help of time series, it helps the customer preferences and peak demand at peak demand time. So marketing optimization means it involves analyzing customer data to optimize in a way to understand the preferences, behaviors, peak demand period. By leveraging this information, businesses can actually make marketing strategies to target the right audience at the right time. So this is a very important part, targeting the right audience at the right time, enhancing engagement and conversion rates. So suppose, for example, an e-commerce platform, nowadays we have a lot of exposure towards that e-commerce. And suppose an e-commerce platform examines customer purchase histories and website analytics to identify peak shopping times and popular products. So with these insights, the company schedules targeted promotions during high traffic periods and personalizes the marketing messages to align with the customer interest. So how they are coming to this particular thing? To time series. Over the period of time, they're collecting the data, they're analyzing, and nowadays there is machine learning, the AI is there, the Python codings are there. So they will help you to bring out a very uh, valuable and trustworthy data set, which will help you to understand the whole scenario, that how to go about and how to reach out to your customers. So this will help the increase in sales and overall customer satisfaction. So even time series will help you in marketing optimization, identify customer preferences during the peak demand times. Now, another very important part that we in today's world, we are very much engaged in digital marketing world or digital era. So how time series is helping digital marketing optimizations. So time series, if we see, is very pivotal for optimizing strategies by leveraging historical data. Why do we need historical data? To forecast future outcomes to an extent. Now, we all know about email marketing. So how to enhance email marketing campaigns. Digital marketers often utilize time series analysis to refine email marketing strategies by examining historical email engagement metrics. We have a lot of software, MailChimp, and so on and so forth, where click-through rate, conversion rate, over time, marketers can identify particular patterns and optimal sending times. These are very simplistic if we see on a naked eye view, but if we dig deeper, every happening or every occurrence is generally creating a pattern over a period of time. So here time series will come into play. For example, a company analyzes its past email campaign data and discovers that emails sent on Tuesdays at 10 a.m. have the highest open rate. So what will they do? They will schedule future emails during these peak engagement periods where they have an expectation that we can reach out to maximum people with highest opening rate, thereby overall campaign success and performance will be uh, ensured. So now further, if we take time series and how personalizing user experience through behavioral analysis. Now time series analysis can be employed to study user behavior over a period of time, facilitating personalized marketing efforts by analyzing individual user interactions. Marketer can tailor content and offer to enhance user experience and increase conversion rates. The type of items you are searching on e-commerce, the type of content you are searching on YouTube, the type of content you are spending more time upon, all the data are being created, being collected, and a particular pattern has been created with this particular thing, that how a particular individual is behaving on particular topic or certain aspects of decision making. Suppose, for example, streaming services, suppose Netflix, Amazon Prime, and so on and so forth, they track users' viewing habits and identifies that a particular user watches romantic comedies predominantly on a Friday evening or action movies. Using this insight, the service recommends similar genre during the time frame, thereby increasing user satisfaction and engagement. If you change the username, if you change the profiles, you will see the viewing pattern and offerings will also change to a certain extent. How this is happening? This is happening by your own behavioral pattern, accessing pattern recorded by the organization, and then a particular pattern has been developed for a particular person, that is you or me. Now, by integrating time series analysis into digital marketing strategies, businesses can actually make data-driven decisions so that the overall campaign effectiveness and optimization of the resources, and with that delivering the personalized experience to the audience. Because as an audience, you will love to see something that you are thinking, and that's something that you prefer. That somebody is bringing the same thing to your interface or to your application and presenting it to you, that please, we are here to cater to your needs and desires to watch a comedy on Friday or action movie during the weekend. No, now, so overall, if we see, the time series analysis is a very powerful statistical tool used to forecast future trends, as we have seen, manage risk, optimize inventory, enhance decision making, and implementing a time series solution in business, automating it and enhancing it with AI capabilities requires substantial experience and expertise. The simple apps that you use, whether it is your Blinkit, Zepto, XYZ, there are so many of them are there. If you don't use a particular app for a very longer period of time, they will definitely track that particular thing and might offer you some cash on your wallet or a particular gift coupon or some extra discounts, so that they understand this particular customer was available on this particular platform for such and such time period, and now that person is not there. So what is wrong? How do we let this people or let this person attract and bring back to that particular fold of business e-commerce transaction, so that you can buy more, you can purchase more, and you can engage on that platform more and more. So in a way, time series is a very powerful, very interesting statistical tool. It helps in a lot of situations, even right from what we know from Jyotish to uh, to the panchangs of our daily life, to the very difficult business decisions, uh, depending on such analysis and such particular statistical tools. So in that way, if you see, time series is a very important factor in tracking and providing you a very reliable data to make your uh, conscious decision regarding your business or any other field of life. So with that, I'm I think I have spoken a lot of things about I thought might be worth discussing with the such an august crowd, since everybody, most of you are much experienced and renowned academicians. So I think these are the few points which I would have loved to discuss, and with today's opportunity, I did that. So I thank everyone, along with my colleague, Ms. Lakshminaran, to support in this event. And we are eagerly waiting for you all to join again tomorrow in the morning session that will start from 10:30, and we'll 10:30, and we'll share the link and details in the meanwhile. And also, I would request everyone to please participate in the feedback form. We need your feedback to understand how to improve and how to get better with the things in the coming days. So with that, I would like to thank you all for your support and your patience. Have a
Thank you everyone for being a participant and giving us a chance to be act as a speaker, giving us some light, some vision, some views on the entrepreneurial fund management and how it works. It's a great opportunity to have this FDP. And yes, we're really waiting for our participants, our guests to get participated and get interacted in the next session, which we are having tomorrow in morning. The feedback link is already shared in the chat box. For any query, you can contact us on our WhatsApp number also. Thank you. Have a good day.
Actually, I have one query with you.
Yeah.
So all the participants are requested to just open your cameras for the attendance counting point of view. We just take a group photograph of yours to maintain our attendance record. So all the participants are requested to open up your cameras. We just would like to click a group photograph
Sharing
with help
close
of
कीजिए.
software, and then we are supposed to say call it a day. So
Sure, sir.
Abhijit, kindly just stop the screen sharing process. We are just in the process of taking the group photograph. So the participants are requested to just open up your cameras, please.
Mhm.
The participants have given the right to open up their cameras. Please just open the camera, please.
We request all the participants, please open up your cameras for the group photograph. तो स्क्रीनशॉट ले लीजिएगा।
Now you can shut down your camera. We hope that you have got your FDP best in the purpose of solving your queries. So we are saying call it a day for today. So if you have submitted your feedback, you can leave the meeting. Thank you. Once again, we will share the link with you tomorrow again. Thank you.
Thank you, sir.